You're watching continuing coverage of the Indo-Africa Summit, where we are exploring ways in which Africa and India can collaborate and can cooperate. I know the gentlemen who are going to be on my panel next are keeping half their eyes, obviously, on what is happening in the US, because, of course, it does have an impact on their businesses going forward. For I will save you the trouble of worrying about what's going to change. Key headline is that Biden is on the brink of defeating Trump, 264 versus 214. Senate tied 48-48. Fascinating story. I want to bring you back and talk about our next session. We're talking about banking, the oil of every economy in the world. Are there ways in which Indian banks and African banks can cooperate and collaborate? Is the cake big enough for everybody to come in and have some food? Those questions are going to be answered in the next few minutes. Let's begin, though, by just giving you a quick summation of the key issues from my colleague, Jill de Villiers.
With Africa moving more definitely into the digital banking and transformation space, there is a lot to be learned from India. The latest watchwords in banking in India and the African continent are digital inclusion, financial inclusion, and banking the unbanked. In India, even public sector banks like the Punjab National Bank and the State Bank of India are competing for customers' attention by offering holistic services in line with global trends. With its liberalized economy and empowered by strong telcos, mobile companies and fintechs, India's banker sector offers a wealth of diverse products to its enormous mass market. The sizable upwardly mobile middle class is constantly looking for new ways of banking and of doing business. Likewise, Africa has a burgeoning population with great opportunities in lower-end and expanding middle-class banking. The panel will discuss current and future collaborations in the banking and finance space between India and Africa.
And the discussions for this session are David Rasquina, Managing Director and Chief Executive Officer, Export-Import Bank of India. Rohit Wahi, CEO and Country Head, India, First Rand Bank. Julian Opuni, Managing Director, Fidelity Bank, Ghana. Vimal Kumar, Chief Executive, Retail and Business Banking, Digital and Customer Experience, ABSA Regional Operations, ABSA Group. Thank you very much indeed for that introduction in terms of some of the issues that we're going to be talking about. Now, in the last year or so, 2 digital banks have been established in South Africa. They are still making their way into the system. When you move around the continent, a similar type trend is emerging. And we have to say digital has arrived. When was the last time that you went into a shop with a credit card? I can tell you, the other day I walked into a shop, realized I did have my card, took out my phone, and it happened. So digital is absolutely with us. Our session is going to examine ways in which digital is transforming our lives and ways in which we can learn from India, a country that has led in ICT development and perhaps from where we as Africans can learn. Let me ask my participants to come in and give their opening thoughts in terms of how we can collaborate and how we can ensure that Africa is not left behind. Can I begin with you, Julian, and speak about some of the trends that you have seen emerging within the banking space as far as digital is concerned, and to what extent you see that being a growing trend?
Oh, thank you. And I think it's, especially in our part of the world, has become very evident that digital is going at a pace a lot quicker than maybe what we have seen happen in certain other parts of the world. But I think India is a parallel story that we can follow. And the main trends we're seeing, I mean, in a country like Ghana, for instance, is probably the second fastest with regards to mobile money on the continent. And the growth of mobile money has also impacted positively on financial inclusion. This is primarily driven by the telcos and has had a huge impact on transactions. And in a place like Ghana, it's in excess of about 300 odd million dollars worth of transactions that go through on those platforms. We're also seeing that because of the young demographic across the continent, there is a demand for less face-to-face interaction for the delivery of financial services. And we are seeing that banks are now reacting as well within our parts of the world with regards to offering as many different non-interactive channels. And therefore, you've got mobile app proliferation is growing extensively. What we're also seeing is the disruption from fintechs, etc., with more agnostic platforms, which again delivers a higher impact for value add when it comes to delivery of financial services to customers. So there's a fast pace, primarily in our parts of the world, maybe driven by telcos and financial institutions doing their bit as well. But with COVID coming in, we've also seen a huge impact and maybe a further expedition of that process with alternative means of making payments. But there's still some way to go and some lessons to be learned with from countries like India on the way forward.
And that's before we have factored in the impact that lockdowns have had as a result of COVID. I just wanted to know, before I move away from you, Julian, are you able to give us a sense of the share of the market that has gone digital?
Not as high as we would have wanted it to in our parts of the world, and primarily because there is an impact on things like connectivity. So the ability to give digital products on mobile phones, etc. So connectivity with regards to network and telcos, there's a bit of a challenge there, and the hyper proliferation is required for that to be as effective. We're still not as cashless a society as we would have wanted to be, and that's highly impacted by the level of financial literacy within the markets, and if you like, on the bottom end of the markets. And so there's more work to be done around driving that. In the short term, I mean, as a result of COVID, we have seen a huge migration, however, from the traditional cash-led transactions into more digital platforms. Proliferation of smartphones is also a challenge in a place like Ghana. So therefore, you have limited ability to give the plethora of services because there's a huge reliance on the analog and feature phones, which normally will enable you to do USSD related transactions as opposed to the full service that you can get from smartphones. But we are seeing the smartphone prices in the local market starting to drive down beyond the mark of about $20, which will then increase the ability to offer the digital services.
Yeah, I wanted to start with you in order for you to demonstrate the extent of the opportunity that we're talking about here. Let's go to India, where we need to link up with Rohit, CEO and country head of FirstRand Bank. And I am coming to you, Rohit, because you are representing a South African bank in India, a huge market. Learnings that you take from the continental Africa into a place where we know ICT is a way of life, and technological advancement, certainly in some areas, way ahead of what you see on the African continent. Your opening thoughts in terms of what you have found in India and the kind of opportunities that remain there.
Thank you, Godfrey. Sawubona, Unjani, Namaste from India. I hope I got those right.
You absolutely did.
Well, so how India has evolved in digital banking differently from the continent of Africa is the ecosystem that has been built around us. So in India, we call it the JAM. J being the Jan Dhan account, which was an initiative started in 2014 to open zero-cost bank accounts for all adult Indians. And till date, more than 410 million accounts have been opened under the Jan Dhan scheme. Then the Aadhaar, and that has been very, very critical in the process of financial inclusion and the digital revolution that we're seeing, because this is our unique biometric ID. and that addresses the problem of no smartphones, etc. And I'll come to that in a second. And M is the mobile, because India has seen an explosion of mobile devices in universe, and the cost of using mobile data today is next to nothing. For $2, you get a month of 1.5 GB a day, I believe, today. So the trinity of JAM, J-A-M, like I said, powered with UPI, which was spoken about a couple of times yesterday, the Unified Payment Interface.
Yeah.
So this UPI is a superhighway of digital payments. It is a real-time interbank payment system, interoperable across banks. Any service provider can sit on it, can structure tailored solution for their clients. And you can use a phone number to pay and receive payments, or an Aadhaar card, the ID, or use your thumbprint and do a transaction. So you don't need a USSD phone or a smartphone. If you're in a location where you don't have network or don't have the capacity to have a phone, you can use a thumbprint. So this is what has triggered this evolution in India. And this is going on rapidly, growing so quickly. The last month of October saw 2 billion transactions go through the UPI systems.
Sure.
And that's a record. So in 30 days, 2 billion transactions. I can't tell you the value of the transactions, but humongous amount. And the fintechs, the smart technology companies are going on innovating, sitting on the UPI platform and mining data and providing new solutions. So this is evolving as we speak.
Did you say zero cost for all adults?
So the bank account, it's a no-frills account. It is a government-initiated scheme. 70% of banking in India is owned by or controlled by government-owned banks. So they have encouraged government-owned banks to open a no-frill account. So it has very basic facilities. But I'll just come to what basic is defined as now. So it is a zero-cost account. UPI transactions are free of cost as of now. You can transfer money from bank to bank without charging any money.
Yeah.
The Aadhaar account comes with a RuPay debit card. RuPay is India's equivalent of Master and Visa, and that is also a free product. And this package comes with a health insurance. These are government schemes for the below the poverty line. Health insurance, life insurance, and a pension scheme built into it. But it has encouraged 80% of Indians to have bank accounts. Today, 80% of adult Indians have a bank account, and they're becoming part of the formal economy.
Yeah. I wanted to double check that one because, Rohit, if you remember, here in South Africa, costs of banking are a huge, huge issue, and it appears we may be stepping onto a game changer here. Yes, these free accounts have been coming here, but I can tell you they've been coming very slowly indeed. Let's bring in Vimal here. Vimal is with ABSA. Vimal, from your perspective, obviously, number one, your initial thoughts in terms of the role of digital into banking that you have seen so far. But I also wanted your thoughts in terms of perhaps new trends that you are picking up that will be key in changing perhaps the way banking has been traditionally done. And we're really still talking almost retail here before we go commercial and the other difficult things.
Godfrey, delighted to be here, and very honored to be on this esteemed panel with some very distinguished colleagues. The whole landscape that we're beginning to discuss today is very difficult to crunch into the time frame that we have for this session. Digital is beginning to become such a wide activity and such a big part of everybody's lives. If I look at it, and I look at it slightly differently because I've had the unique opportunity of having worked both in India, and now I'm an Indian working in Africa. So right. I've really seen the whole Afro-Indian economic development, which digital is a part of, quite from very close quarters. So if I may argue that there are similarities to the way our economies are developing and how digital is being adopted, and there are some dissimilarities as well. And I'll come to why I say that. I think India's model of economic development was always inclusive. So the government followed a very inclusive model of economic development. Rohit earlier spoke to how the government has actually played a significant role in providing financial access to the poorest of the poor and right at the bottom of the pyramid, etc. And the benefits are beginning to roll into that economy. Plus, in the recent 5 years, there's been a huge push into digital economy, building the national payment system, the unified payment interface, etc. If I bring that to the African context,
Yeah.
the whole revolution really started in East Africa, and it didn't really start in the bigger or the more developed economies. It started in East Africa, started as a need to sort the remittance needs of laborers, right at the bottom of the pyramid, who needed a solution to keep funding their families who were in the remotest corners of the continent. And the M-Pesa experiment is globally known. So the African growth really came about from there, and it came about with fulfilling a very basic need. Now, the difference in the two models and the dissimilarity that I speak to is that in India, the government and the banks are more actively involved in this. And the government and the regulators and the banks are actually pushing priority sector lending, and they're pushing financial access.
Yeah.
But in Africa, it's been a little on the other side. The MNOs have actually taken a far bigger role in bringing financial access to the customers in the deepest corners of the continent, and that has been an absolutely fantastic model that we've not seen anywhere in the world. So the explosion in mobile money, the creation of the whole mobile money ecosystem has driven digital transformation. And for me, digital transformation, Godfrey, is really bringing the end goods to the customer in a very seamless manner. It's not about the cool technology and the cool smartphones. It's really about enabling end usage in a straight through manner, and in a point where customers can access basic financial capabilities. Banks have played a subsidiary or a secondary role in Africa, and I think that's the dissimilarity. In terms of the trends, from a banking perspective, we have taken a position here. We've built our own ecosystem, working with MNOs and with financial technology partners to really bring financial access to the poorest of the poor and drive it as part of our commercial strategy, and not so much as a CSI initiative. So I'm quite excited because the development in technology, the COVID environment is actually pushing greater growth. And Julian spoke to how he's seeing greater adoption, but it's really much bigger than that. And in the coming months and years, you'll see an explosion. So it's a very exciting time in Africa at this point in time. Thank you.
I want to come back later and talk to you about the collaboration potential between MNOs and the banks. I'm reminded of that scenario years ago where we had banker insurance. You have this big bank on one side which has got its insurance side on the other side. Some of them still have it, but could that be a future model? That question is coming up to you, Vimal, as well as the others. But let's bring in David into the conversation, because David is in the business that is very important for the African continent, financing those goods that need to coming onto the African continent, as well as take those goods into India. But it appears we've got a little bit of a problem with David. We're unable to connect to him. I'm hopeful that he will come back to us and chat again. I want to explore another strand of the conversation in terms of the collaboration that we are talking about and that we are seeking. As a bank that is sitting in India, if I can go to you, Rohit, how do you approach coming in and being a part of the growth story in Africa? Is that coming in and taking over an African bank, or is that collaborating and working with them and finding ways in which you fund deals, in which you perhaps do transactions together?
So, Godfrey, we are a South African bank in India in any case.
Sure.
So we are present on both sides of the continent. So it's very easy for me because we've got networks in sub-Saharan Africa. and we are present in India. Our core strategy is the Indo-Africa corridor, the trade and investment in the corridor. So we are partnering. We've got businesses on both sides already, and it works very well that way.
How difficult is it to straddle the regulatory processes that we know are demanded, especially on the African continent? As you say, you are uniquely placed because you operate in India, you operate on the African continent. And often when we do these debates, you often hear that the politicians will go out there and speak about how they would like their countries to collaborate and do this and do this and do this. But as to the mechanics of how that ought to be done, you then find in many cases those broad ideas remain where they are with the politicians and don't crawl into business. Are we seeing politicians on the African continent opening up to the extent that allows the facilitation of trade between Africa and India? And do we need to do more?
Well, there's always, so I don't want to get political in the answer, especially with the US election results pending.
Just mention nicely what they need to work on. They will be happy with that.
No, I think the vision, the top leadership always provides the right vision. It is the execution of that vision as it trickles down is where one faces hurdles. And that's because, like Vimal said, every country has different approach to growth, to whether it's financial inclusion, it's growth of the economy, it's trade. India has been inclusive, for example. So when you, while the visions are very noble, executing them sometimes can be very difficult, and I think it's a journey. As different countries evolve economically, we'll be at a meeting point.
Yeah, Julian, have you looked at India at all as a market?
We haven't looked at India as a market to actually necessarily enter. Taking learnings from India, certainly. And the reason why I say we're primarily an indigenous, a privately owned indigenous bank here in Ghana. And you tend to want to grow your strength in your initial market. And then maybe you start looking into the sub-region and, immediately before you look at the whole African continent, maybe before you go into India. However, I think there are opportunities for collaboration because of the level of trade between the two countries, where without necessarily needing a bricks and mortar presence necessarily in a place like India, you can still facilitate and have engagements that add value to businesses on both sides. And that's about, the arrangements with regards to, driving exports, because a lot of exports from Africa, including Ghana, goes into India. And you will see that apart from the standard banking financial services that you offer corporates with, trade lines, etc., that you offer to help. On the other side in India, I think there's also been some support with regards to, countries that are coming from less developed countries and giving them duty tariff preferences, etc. And so driving that trade is positive. I believe strongly that talking about digital, the days of needing to physically be present, allowing for the regulatory, frameworks of the various countries in which you're straddling, the need to necessarily have a bricks and mortar presence is becoming, lower and lower, where it's more around how do you have a borderless approach to offering products and services without necessarily needing to be physically present. And so the collaborations will also, it's normally better where you're speaking, if it has to be a formal or physical presence, you're speaking to organizations or financial institutions in a place like India who don't necessarily have a short or medium-term plan of being necessarily in your market. And therefore, there's no sense of infraction. But then you can work on synergies and, discussions around even, exchange of technology, because we speak about, the technology in India, and they've made real progressions with regards to the digital space and what supports banking services. And I think Africa needs to move away from constantly trying to reinvent the wheel. And, if they're off-the-shelf proving records that we can use to leverage and expedite the process of going digital as a continent, then we should be having those sorts of engagements and exchanges with countries like India to make sure that we work in the right direction.
Yeah, the next question is really for Vimal, but I would like you, Julian, to also answer it. It's about the regulators. How adaptable have they been to the coming in of digital? Because to an extent, digital is coming in and encroaching, if you like, on their work. And now, in some cases, what we have seen is regulators scrambling to come in and regulate after the people with very nimble money have already started their journeys.
Yes, when it comes to the regulators, again, you have to straddle a very thin line to, because we are regulated by the regulator. I have to be cautious about what I say. Um, but yes, I mean, in our part of the world, look, I must admit that we have, from even from the government point of view, and from the vice president who's taken it on himself with regard driving digital in Ghana, and the central bank has had a huge amount of impact on driving, if like, digital and the regulations that govern the various players within the ecosystem.
Yeah.
And I think that's one of the key parts where some in the past has been missing. And by doing those introductions and also putting the safeguards around things like cyber, because I mean, I think it was mentioned earlier, it's such a big topic what we've opened, because when you look at things like even cyber, etc., it opens up a totally different discussion. So you can't, full steam ahead, go digital without having those protections and risk mitigations in place. Otherwise, you open your system up to all sorts of risks.
Yeah.
But I think in our part of the world, they have been very, very, very proactive with regards to the regulations and also allowing more industry players in. Regulations around money issuance and all those things are now firmly in place around cybersecurity, and the measures and the benchmarks have been put in place. So I think in our part of the world, the central bank has been very progressive. Yeah. Interoperability has been a huge feature of the work of GIPS, which is a central payment, if you like, the settlements platform, government-owned settlements platform. And they have also helped the interoperability between mobile money and banking services. Yeah. And having that also expedites the process of payments and also getting more people included. I think there's work now going on with regards to the fintech space and putting the framework in place to enable them also know under what measures that they can operate and the regulations to ensure that you also protect the consumer. And then finally, I'll say, because we are coming from a background where in the last couple of years, there's been a banking sector cleanup in Ghana, which really shook up the financial system with the exit of close to 8 or 9 financial traditional banks, and the savings and loans industry with microfinance, a lot of them no longer on the market. It's also created a gap which could impact on financial inclusion, but also means that more regulation needs to be in place to if you like, for the consumer base, give them some sense of the credibility of the financial system within the country. And a lot of this needs to be worked on.
Absolutely. Because, correct me, Vimal, if I'm wrong, but I think M-Pesa came and then the authorities then decided, they actually need to regulate this, because now you are talking about a mobile phone company that's now operating as a bank. But Vimal, honestly, from your side, I wanted to know, you operate in a number of African countries and therefore have the experience perhaps to share with us in terms of how the regulatory authorities have responded to this spawning of a new way of sending money and buying goods and services. Maybe share with us, if you can, just the kind of reactions and ways in which the authorities have gone about this.
Yeah, Godfrey, thanks for that. I was expecting a curved ball from you, so didn't realize it would be on regulations. But Julian said a lot about broadly that aspect. But before I touch on regulations, Godfrey, with your permission, I just wanted to take a bite at the previous session. And what I wanted to say really is the big opportunity that we have not discussed is the continental free trade area that will come into, it will get energized sometime next year. I think that opens up significant. Okay, then perhaps I'm preempting, but that is really going to open a significant opportunity. Then maybe we'll come to that later. Sure. And the second is from the Indian perspective, looking at Africa. I think Prime Minister Modi in Kampala recently, announced a 10-point program that specifically looks at deeper, greater cooperation between India and African nations, and that's really a good beginning. And for me, that framework and a statement from the top of the house tells me that there's much seriousness in the way the governments want to interact with each other and how India wants to play a bigger role in African development. Coming to your question on regulations, Godfrey, I've always looked at regulations very differently. I think I see regulations as enabling stability in the financial system. I see regulations as something that prevents any kind of collapse of the financial system. So if you broadly look at how regulators have reacted pre and post COVID, it's not been any different to the regulatory activity that you would have perhaps seen in any part of the world, including some of the more bigger and developed economies. The reality is banking has survived the disruption wave from the fintechs because banking is regulated. If we did not have regulations, trust me, a lot of the banking system would have been decimated by now. So from that perspective, I'm grateful that there's a strong framework that keeps the financial system strong and healthy.
Yeah.
Coming to your point around M-Pesa and a lot of the new tech that is landing, which is being seen outside the banking system. I think specifically if I talk about Kenya and M-Pesa, the Kenyan regulator is keeping a very close watch on how the M-Pesa ecosystem is building. As you know, it started with remittance. It has moved from there into the lending space. From there, it has moved into payments. And at some point in time, there is a vision within M-Pesa that they would like to carve out this part of that MNO into probably a different entity and come more within the financial system. So I wouldn't say that regulators are scampering around.
Yeah.
I think they're cautious.
Yeah.
They are cautious primarily, Godfrey, because a lot of the new tech that is coming is indeed quite challenging for everybody. Whether it is cloud, whether it is cryptocurrency, blockchain, artificial intelligence driven products, these are new concepts for everybody. So I do not blame regulators if they are slightly conservative and they want to really understand this, know this better, keep talking with each other. As you know, in South Africa, we established a regulatory college where African regulators meet quite frequently, and that's really become a place where ideas are exchanged and regulators are beginning to share their experiences. So it's no longer a unitary behavior from a regulator, but it's more broad-based and people are beginning to really come together. So I really see a lot of opportunity here. Regulations will drive right behavior in financial systems in Africa and as it has done in other parts of the world.
Yeah, which is great because as we were talking about earlier, of course, the Africa Continental Free Trade Area does require you guys to be definitely up to speed and also be able to collaborate, because for us to be able to move those goods and services around the continent, we need the banks to be ready to finance it. But you probably would know this better than me. Bankers by nature are conservative people, and therefore they will look very closely before they take those decisions. But I wanted to get back to the other issue that I raised earlier about the future models of all these different players that are coming onto the banking scene. Is it the way that perhaps you combine your MNO with your bank, or is it healthier and better that we keep these entities separate? Can I get your thoughts, Rohit, and then we'll get everybody else to come in and chip in?
Godfrey, I think the answer will be different in the two continents or subcontinent and continent, because the way India has tackled it or the problem that exists in India is not the same in Africa.
Sure.
The MNOs did enter the payments business, but there were regulations from the beginning. You see, banking, and like Vimal said, regulation is good for us. Banking is a business of trust. We take care of depositors' money. And that has been one of the constraints for financial inclusion, because somebody who's never been with a bank is worried about giving his money to a bank. So regulation is important. The MNOs and the payment companies had restrictions from the beginning. The regulator in India came in very early and offered banking licenses. They're differentiated banking licenses. They're called a payment bank license or a small finance bank license, which is meant for mobile companies who are running a payments business. So, and some of them have taken those licenses. They brought them into the banking fold. Now, the advantage is that when you're just an MNO, and the M-Pesa example is different when it's growing, But if you're just an MNO, you're only doing payments and remittances. But once you're in the bank, you can get the full gambit of financial inclusion. You can transact, save, you can borrow, you can invest, you can get insured. And that is what is happening when in the Prime Minister Jan Dhan Yojana accounts, people are getting insurance, they're getting overdraft
Yeah.
facilities. So that's the difference. Sorry, there's an echo. There's a feedback.
Sure. No, but I heard you clearly, definitely in terms of how you see this panning out. And I wonder, though, if there are lessons from India for us to be able to pick up so that we don't repeat some of those things on the African continent. Julian, your thoughts?
Yes, I think with regards to, I think Rohit is right with regards to how it's worked across various jurisdictions. And I think it's normally from the regulatory point of view, you have to determine what lever you want to use to drive this. And if you believe that traditionally, the banking system is supposed to actually drive the majority of additional services and not just the payments,
right,
then the regulation then determines very clearly what the MNOs are supposed to do and what services they do around just offering payments, as Rohit was saying. And then when it comes to the additional financial services, because sometimes we just assume that financial inclusion means that giving someone, for instance, a mobile wallet and the ability to actually make payments. But if you look in our part of the world, those systems always end up with a cash out of some description. And therefore, all you're doing is you're facilitating movement of cash from one person to the other. And then it graduates from there to maybe payment for goods and services. And then you're getting a bit more digital. But if you're going to do insurance and loans and savings, etc., the regulator or the authorities, as it may be, can determine that is the remit of banking services. And therefore, if you want to do that, then you go for a banking license and then you decide to offer those services. And it comes with the various capital requirements and the risk management issues, etc., that go in there. I think there's room for collaboration going forward, provided everybody understands what they bring to the table. And I'm a strong believer in creating ecosystems where within the ecosystem, you understand the strength and leverage on everyone's strength to create a stronger ecosystem that is to the benefit of the consumer at the end of it. And therefore, if banks, for instance, collaborate with the MNOs, a lot in our part of the world, the MNOs have got a full lead on the banks with regards to wallets and providing payment services for the general public, including those who would ordinarily have been financially excluded. And therefore, how do you leverage on that platform utilization and sharing of data to provide the additional services that the regulator allows you to do? And then, it has an impact on revenue share, etc. But the whole pie is a lot bigger, and so there's no loss for anyone. And so being an early partner with the MNOs really works. And I think as a start, that's one way to go. But there will always be the cautionary approach on both sides, because there's always a sense of one wanting to, if you like, swallow the other one up in certain markets. And that's where sometimes it creates that level of friction. But the regulator can clearly help determine that, which leads to a stronger financial system.
Yeah. Let me ask that question tongue-in-cheek to Vimal. Vimal, ABSA doesn't want to take over MTN?
Godfrey, I think we've got to look at life differently. At the end of the day, free competition is not about eating each other up. I think it's about playing to your strengths and ultimately creating value for the customer, and that really is our sustenance. So if I speak for the ABSA group, Julian touched on the frameworks. We've been in that framework now for a couple of years in many countries. So for instance, you spoke about us buying MTN, but we are into a very strong agreement with MTN in Africa, essentially to drive financial access. And it's really a tripartite framework. So it's a bank, an MNO, and a fintech that runs the whole onboarding platform for customers at the bottom end of the pyramid. And Julian will know from the Ghana experience that we've had that we're running this program very successfully. And it's a program that brings us rich dividends. It's a commercial part of our strategy. I've always believed that the African opportunity is too large for any one player to be able to swallow and then digest it. It has to be a coming together of various players. Not one person can dominate this. Players who come with differential sets of strengths And finally, you create a model and an ecosystem that ultimately benefits the customer. It's not so much about individual interests as it is a collective coming together of capability and technology
Yeah.
to serve the end customer. And that's what we've done. So our frameworks that are running today in Kenya, Ghana, and Zambia speak to how it can be successfully managed. A bank bringing in the balance sheet and the customer knowledge, an MNO who has the customer transaction information and is obviously KYC the customer,
Yeah.
and then the fintech who has the smart technology and the platform to score customers, onboard and account manage. It's the coming together of really the perfect ecosystem. And that's what I firmly believe will help us gain capability and strength in delivery in Africa. If you try to run alone and by yourself, I don't think you're going to go too far. And I frankly don't see MNOs or fintechs as a threat. I see opportunity for everybody to come together and build a new kind of model which speaks to the challenges of the 21st century, especially in the post-COVID environment.
Yeah, I was just going to say to you, Vimal, that these MNO guys have been eating everybody's lunch, even within our sector, within the broadcasting space, the media space. These guys now have become content generators, and certainly I remember some time back there was perhaps suggestions that you could have a broadcaster teaming up with an MNO and then helping to get that content out, because they've certainly been peeping into everywhere. But I suppose that's part of the disruption that they have brought to the scene. I want us to move very quickly, but feel free to pick up any of the points that we've been talking about. But we need to talk about the opportunity that is the Africa Continental Free Trade Area. Now, where does digital and banking come in? I mean, banking, we know, obviously needs to finance the goods and services that need to move around. But I am thinking now, how do we throw in digital there so that it is able to become an enabler? I remember the other day I think it's the Trade and Development Bank doing the first blockchain transaction somewhere in East Africa. Where do I begin? Can I begin with you, Julian?
Yes, I think there's a huge amount of work that needs to be done. And I think sometimes we tend to focus on the challenges based on what our current capabilities are across the continent with regard to the success of the Africa Continental Free Trade. And if we start simply and start even thinking around how as banks do we support the access to markets for our various countries, and it can easily be facilitated with regards to, allowing for the regulations that support it, the ability to even create marketplaces that transcend borders. And so the movement of goods is not simply just on the large scale goods movement, but if you're looking at creating access to markets and marketplaces that are borderless, and you have banks supporting not just the merchants, but also supporting the ability for the payments to be made across, and then the movement of the goods smoothly from one country to the other, that will have an impact on the local trading. I think there needs to be a better understanding and collaboration, like I mentioned earlier on, with regards to especially financial institutions that play to their strength in their own markets. And how do they then collaborate to offer a higher level of service to people that will trade across the continent and also for the end consumer? So you may have visibility of a certain amount of trade between, say, country A and country B, but within there you still need to have some collaboration between the banking system. For those institutions that do not have an Africa-wide presence, how do you then explore the collaborative opportunities so that there's a seamless sense of a transaction from end to end, as if they're working with one bank? And for those that have the wider African presence as well, they can also leverage on the same thing and make sure that it gives them better visibility on the various localities and the markets and the advantages that brings along. There's a lot of work to be done also on understanding the trajectory of the growth, because I think that the utilization of data and understanding the data that's going to drive the success of this hasn't. Well, there's work being done, but I think banks need to get some higher level of visibility so that you can actually plan into the landscape, if you like, of the next 4 or 5 years or so, exactly what part you can play to actually drive the trade.
Absolutely. And we know that there's work that's being done already on that front by the Africa Export-Import Bank. There's a national payment system that they are developing. And if I remember correctly as well, the African Development Bank has been working on that front. I just wanted to say to you guys, our discussion became a little bit unbalanced because we lost David. Because all those lessons that we were talking about that should be coming from India onto the African continent so that we're able to, jump over some of the developments, we're unfortunately unable to tap into them because David has had major internet problems and will not be able to join us. So perhaps another time. But Rohit, feel free to bring in lessons from India as much as you can. But also please talk to perhaps how you view from the first round group sitting in India, the Africa Continental Free Trade Area. Rohit? I'm not too sure Rohit's microphone is on.
Can you hear me?
There
Yeah,
you go.
sorry.
It's technology, Rohit. Even the bankers are slow to it.
That's true. Godfrey, like you said, David should have been here to get the right balance into this conversation. I'm not an expert in that area. But I must say for Indian businesses, there's a major interest in Africa, in pharma, in auto, in FMCG. And the free trade agreement is going to benefit Indian exporters who can right now, let's say, only present in, let's say, Kenya or South Africa, but then they have a larger market which is available. This is going to be very positive for trade between India and the continent.
Vimal?
So Godfrey, I have three parts to my submission. I think the first is, and I started speaking earlier, the continental free trade area opens up a $2 trillion economy, which is the estimate for Africa. And if you look at some stats, what the basic stats say is less than 18% of trade is actually trade within Africa. The rest of it is really outside Africa, and I think that's the big opportunity for that free trade area, as and when it gets energized and put into place. The second issue is, and it is an issue, and it could become a showstopper, is we need to build the infrastructure. You cannot have trade if the infrastructure is not in place. You need the ports, you need the roads, the bridges. You need to connect one part of the continent to the other, and it will require tremendous investment in infrastructure. And I think that's where Indian companies can play a big role. So, the African continent has been dominated by a lot of Chinese investments, but that's a different model of, business opportunity. I think what India can bring to Africa is more private sector participation in building infrastructure. And most importantly is local skills development. Right. Because when a infrastructure project is completed and these companies leave, they should have sufficiently skilled local African talent to be able to then, take up the next big project. So skills development. The third for me is the availability of credit. So I was listening to Dr. Adesina, one of the conferences, and he was very clear that while the African Development Bank is at the forefront of building infrastructure projects and funding, long-term debt, the concern really, Godfrey, is African economies need funding in local currency. Right. Because you can have obligation in hard currency and your revenues in local currency. It creates significant amount of wrong way risk into the balance sheets of these economies. And that's one of the issues that we're beginning to see now in Africa. The debt is all in hard currencies, whereas these countries need local currency financing. So therefore, to people like Rohit and even David, is Indian banks need greater presence in Africa. Yeah. So you will see that Indian banks are not massively present. You've got Bank of Baroda and probably State Bank of India, kind of sprinkled here and there, but there isn't a serious presence of Indian banks, that can then lead to the Indian private sector beginning to start driving infrastructure and helping the continental free trade area to become a reality and become smooth and really drive this $2 trillion economy to 4 trillion in the next 4 years.
Yeah. Vimal, you have just made me think about a question that has been at the back of my mind, but I'd never articulated it. Who finances African trade? Have you guys done the numbers?
Yes. So if you look at the debt to GDP ratio of Africa in total, and not any country in particular, it's in the region of about 40%, which is below benchmark. So the IMF looks at economies above 60% as economies are entering the red zone. The challenge really is the transparency and the structure of the debt.
Yeah.
And that's where you struggle, because a lot of African governments go and borrow in euro bonds. And they offer extremely high ticket bonds, and they get oversubscribed. And I mean, obviously, who wouldn't want to buy a bond for 7 or 8% coupon? Who wouldn't want to do that? The problem is that is where the whole debt situation begins to become a bad debt situation, because in a downturn and in a slowdown, this debt becomes difficult to kind of service. And then you've got these bilateral agreements between governments and private financiers, etc., which you do not have full visibility. So my submission is, to get a complete understanding of the balance sheet of a country, there has to be transparency, and there has to be a detailed analysis of what kind of debt is driving asset creation. And I was on a panel with David Cameron earlier in the year, and one of the beautiful things he said is that the IMF and the World Bank and the other DFIs need to really start putting more equity into African economies and not debt. And I think that's the game changer that he is hoping to push, even at a G8 level, that developing economies need more equity support and not burden them with debt that they find difficult to serve.
Yeah, and it begins with us and the choices that we make at the national and company levels, without question. That financing of African debt, and even the opportunity that we're talking about feeding that $2 trillion economy that we're talking about, ought to be coming from the African continent. And then maybe we can go and take 1 or 2 loans here, but certainly the opportunity lies within us. Gentlemen, you won't believe it, even without David, the time has run out. And I still had another couple of questions or so that I wanted to ask around, but that's for another session, another time. Thank you very much for joining us for this discussion, and I'm hoping that you watching online from wherever you are in the world have had value, and you've been able to see opportunities in which perhaps there can be more that can be done to increase the level of trade between India and Africa, and how to finance it. And I hope that you'll be able to know where to go, whether you're going to knock on First Round, or you're going to knock on ABSA or Fidelity, or indeed go to Exim Bank India. That might well be your choice. Thank you for watching. Until next time, in fact, until tomorrow, thank you for watching this webinar. We will be back at 1 p.m. Central African Time.